gives you a good indication of what's happening in the Brisbane market. And so, again, when you're looking at data, be very careful where you take the data from. So this is CoreLogic, what properties are selling for, not what they're listed for on Brisbane.com, what they're actually selling for. So you can see, why Brisbane is really, hands up who's got property in Brisbane or Greater Brisbane region. Yeah. Okay, well done. You guys are doing very well, so that's excellent. So Brisbane's really performing very well, as you can see there. So the yield is basically the rent return on the purchase price. So the median yield for a property in Australia, in capital cities, is around about 3.4%. So essentially what that means is if you're borrowing money around the 6%, that means that property's probably going to be negatively geared, which means you've got to pop it into a different way. So the idea is, in the perfect world property, we can get the capital growth and the yield, cash flow, positive cash flow, in all the ways possible. We're in a very strong property market in many parts of Australia. So that just shows the standard sort of house is probably going to be negatively geared on a 10 or 20% deposit, right? So that's why we want to look for something that's going to give us a higher yield.